Good afternoon, everyone. I am Carla Boyce, Premium Relationship Manager, head of our VIP banking here at Scotiabank Barbados. Welcome to our 16th episode of Scotia Insights and our second one here in Barbados. We hope that today's discussion, aptly entitled Mortgage 101, is going to spark some discussion and inspire us to think about if we would like to own our own home. If you already own your own home, maybe you'd like to switch your mortgage. Hopefully we can entice you to switch your mortgage over to us. Or if you'd like, we can talk about switch consolidation and how to access your home equity. It is my pleasure to join you all this afternoon. But before we get to the presentations, we have 3 house rules. First one is, please, if you have any questions, go ahead and enter them into the chat. And after the presentations, we'll move straight into the discussion. Now, when your question is selected, you will be asked to unmic your mute so that you can speak. All right, let's get into this. And I want to introduce the panelists. We have from our Broad Street branch, Natasha Wood. She is our personal banking manager. And Natasha joined Scotiabank in 2008. Prior to Scotiabank, she was on a sales team at another financial institution. Now, Natasha, when she joined us, has had several different roles: personal banking officer, relationship officer, assistant manager, personal banking, and now her current role as personal banking manager. And she's in charge of the sales team of our largest branch, our Bridgetown branch. We also have on our panel, Kim Bradshaw. Kim has joined us only 3 years ago, but she has been our top personal banking officer consistently over the last 2 years. And Kim also was nominated in 2018 for our Best of the Best. She's our Premium Relationship Officer. She has a wealth of experience with over 20 years in sales and marketing. So now to kick things off, I'll ask Natasha to take on.
Thank you so much, Carla. Good evening, everyone. It is a pleasure to present to you today, and I want to thank you so much for giving us your time to hear what Scotiabank has to offer you. Without further ado, I'm super excited to present to you today. Next slide. All right, so planning for your future. Make and commit to a plan that matches your goal. When you think about that, do you have a SMART goal? Is it specific? Is it measurable, achievable, realistic, and within your time frame? Do you know where you want to live? Do you want to live in a residential area? Do you want to have a country view, that fresh wind blowing in your face? Do you want to live on the West Coast, or is it the South Coast you want to live? Do you want to have a large backyard? When you think about those things, how does that really make you feel? Is a breath of fresh air? Do you already own your home, but you want to switch in to renovate or consolidate your debt? Are you working towards and planning towards this goal, achieving this goal? I know sometimes, we switch from the plan, but let's make sure that our team of financial advisors will help you manage and stick to your plan. I know some of you perhaps might already own your own home, started to plan around this, and that's excellent. However, if you haven't, I can tell you, my financial advisors will help you realize your dream. Let's review and adjust your plan a bit. Do you have a side hustle? I do remember when I was a lender, wow, that was a good experience for me, because I remember giving each and every one of my customers that time where I sat, I listened to them, I helped them plan through their journey, and I can safely say I've helped them realize their dream. Next slide. My team, an expert team, they can provide you that expert advice. When we think about pre-qualifications, sometimes we drive around, we see a house and we say, wow, I want to own that house. But then what we need to do now is to sit. We need to see whether or not we've started to save towards this dream. Are we looking at a house, maybe 300,000, 500,000? Does it fit our budget? Also, when we own a home, we want to make sure that our lifestyle doesn't adjust too much, because you still want to be able to live a certain lifestyle. At Scotiabank, we have some great rates. Come on, let's take you on this journey to either owning your own home or switching to Scotiabank, where your expenses are manageable. Let's not forget that coverage that we have as well. We can protect your home. Obviously, when you're investing in this new property, we want to make sure that that investment is covered and secured. I will now hand you over to Kim Bradshaw, our Premium Relationship Officer, who will take you through this journey. And I am sure that with the steps that Kim has for you, you will be a Scotiabank customer. Over to you, Kim.
Thank you, Natasha. Now I'm super excited, just like Natasha, to ensure that you get one step further in making that decision to join our dynamic team over at Scotiabank. So if you have not had that opportunity to think about it, I hope that after my presentation, I would have given you at least 5 steps or push to get you over to at least chatting with one of our expert mortgage specialists at Broad Street. Next slide. Okay, so Natasha would have alluded to owning your home. So I'm going to focus on if you already have your home. So what am I going to tell you that would make you move your mortgage over to Scotia? Now, I want you to understand that with our expert advice, we're going to be offering you a customized solution, because we appreciate that everyone's needs are different. And depending on your particular situation, we will walk you through all the steps. We promise you that we will be right by your side to guide you all along the way with those special interest rates that Natasha spoke about, and looking at a monthly flexible installment plan that suits you and your family best. So if you're getting just as excited as I am to listen to some more and learn about all the flexible options to secure your investment, we're talking here now about your insurance. Natasha would have spoken a little bit about it just now in protecting your investment. You don't want to spend all that money after making all these great plans and driving around and looking at all these architectural designs, and then what? You don't have these things protected. We pride ourselves in letting you know that we have that protection plan that suits you as well. And there are various options that we will walk you through. I hope that every step of the way, at least you're hearing that I'm telling you that I want to encourage you to at least call and speak to one of our expert advice specialists. Next, please. All right, so after getting you a little pumped up, what are the options available for you? So there are 3 options ideally. There's either the straight switch, there's the mortgage transfer, or a consolidation and access to your home equity. Now, what is a straight switch? This straight switch is ideally the balance that you have available now at your existing financial institution. This is where you are now going to move that balance over to us at Scotia. Now, that's one option that you have available for you. So you're adding nothing to that balance. You just want to move over your mortgage to benefit on one of those very special rates that we have available for you. We also have that mortgage transfer. We have an option available for everyone. We appreciate that sometimes when you start you start to work, you start to earn, you achieve one of the goals that you already have is, I want to own my home one of these days. And for this sad reason, this is where the mortgage transfer comes, because you might have built your home all by yourself, but now you've extended your family. You've extended a family by getting married. So now it's you and your partner. So this is where the mortgage transfer comes, where you're not only transferring the balance, but you're transferring a title that perhaps might have been solely in your name. We're now joining someone to that title and bringing it over to us. That's another option that you have available for you. Now, the third option is to consolidate or access home equity. A consolidation basically is not only are you looking at your mortgage balance, but you're now looking at all the other liabilities that you have. This is other debt that you may incur along the way. As we live, we do incur debt, you know. So some of these things are, you may have perhaps an existing car loan, you may have whatever debt you have, other loans out there. So you're realizing that each month you're making at least about 6 different payments along with your mortgage payment. Now, ideally, this is the option available for you. You're going to look to consolidate all those payments into one payment realistically monthly. Now, the option of doing this will have significant benefits for you. And one of those will definitely be savings, but we'll get along to the savings eventually. We're looking now at your access to the home equity. Now, what does this mean for you? The home equity essentially is the value of your property versus your loan balance. So the difference between that balance and the value of your property is your equity. So you can either upstamp to what you would have originally borrowed, or you can upstamp a little further to the value of your property. Now, some people in having conversations before, they're not aware that they can do this. Yes, if you would have had an original balance, an original amount of 300,000, and you've had that mortgage for some time, that balance now would have probably reduced to about 150, 160. Then you can take that up back to 300,000 by including several different things that would be available to you. Or if the value of your property would have increased, then you can even go past the stamping that you originally have up to the amount that we can loan you within the value of the property. So stand by and hear some more. Switch. All right, so we just spoke about various things, including, you know, your savings, your consolidations and everything. But I know that question is that burning question that you probably are thinking about right now. Why? Why switch? Now, the number one reason you're switching is that you're going to be getting significant savings. Now, if you would have had that mortgage for some time, you know what your monthly payments are, but as you are aware, your expenses go up. I've never heard of anyone saying, you know, I don't have that much debt or anything at the moment. So again, when I spoke to you about consolidations earlier, this is a perfect way in which you can realistically start to do some significant savings, because you're merging all of that debt into one, making a realistic payment monthly. This gives you the flexibility of some disposable income that you can put towards savings, and that alone can assist you in your cash flow monthly. And it will also allow you to make more choices in terms of investments. Then we spoke about special interest rates. Now, this is a great way, or a good reason, I should say, to switch to us, because I know, because for me personally, I would have been with a financial institution, and since I had my mortgage, no one had ever contacted me to speak about my rate, if I was realistically making these payments, how was this working out for me? Well, I can assure you that since I did that big S word, that switch, I now am much more comfortable and I'm able to save a lot more monthly, all right? And the option of prepayment. Now you can do prepayments into your mortgage monthly. And what does this look like? You have your monthly payment, and in addition to that monthly payment, you can ask your expert advisor to give you an option plan where you can pay a little bit more into that mortgage monthly outside of what you are accustomed to paying. You've now gone ahead and you've done that switch and you've realized, whoa, I actually have a good set of money still in my hand monthly. Should I make this good decision and pay a little bit more to this mortgage, or should I do savings? Now that's up to you, but what I'm here to tell you is that that option is available to you once you switch. You will see the benefits of that. Then there's also the lump sum payments. Now that lump sum payment, every year you are allowed to pay a lump sum into your mortgage. This is within a calendar year, you're allowed up to 15% of your loan amount that you can make towards your mortgage payments. So this is another option that you can look at as a benefit to you once you switch over to us. Now, as I would have alluded to before, you don't want to think about all these investments. You don't want to be looking at your future and, up stamping your mortgage and everything. And then you don't realistically look at coverage. Like I said before, we do offer the insurance and there are great rates, very attractive rates available for you. And this is for your property. Now, one thing you can be assured is that we're actually a one-stop shop when you think about it, So again, I want to encourage you to chat with any of our finance advisors and they can discuss and give you a holistic view of everything that you would be looking at if you indeed switch to us. Slide. Now, after hearing about insurance, after hearing about investments, whether you're switching, whether you're doing your new purchases, I know that these questions always come up. Now, what does this cost me? Now, we definitely will need you appraisal done. The appraisal gives you an idea of what the house value, and that's what we would look at in terms of determining, what your commitment fee would be like, what your legal fees would be like. All of these are the costs that you will have to incur once you're looking at making that big decision. There are also switching penalties because financial institutions have penalties in place if you are looking to switch, depending on the time that you're looking at doing that. So again, our team of specialists would be able to guide you through. We appreciate that everyone's situation is different and everyone will be obviously borrowing a different amount. So these rates vary. So it would be better to come and have a real in-depth conversation with a specialist and they would be able to guide you every step of the way. But I have something, a little surprise for you. So as it relates to all of these costs, we pride ourselves in telling you that once you switch to us, we do have a money back program in place, which is 3% of the amount of funds that you're borrowing up to $10,000. So after hearing all these costs, we can assure you that we are there to assist you along the way in at least covering some of these costs. Again, more details are available once you have that conversation with us. Switch. Right, so we spoke a little bit before about the home equity. So we have different things that you can do within your equity, or thinking about taking out your equity, you wanna find out, like, what can I realistically do? All right, so we know hurricane season, for one, is coming up. And this is the time that persons look around the home to see how they can improve, perhaps look at tightening those hurricane straps, or perhaps looking at changing the roof. Whatever you want to do within the home as it relates to home improvements, this is a way, because you're thinking about these things, but you're also saying, I wish I can do this, but I don't have the money. Remember, you have an asset there, and that's your home, that's your property, and you can use this to your benefit. So in terms of the home improvement or the renovations, this is an excellent way to utilize your equity. Also for education, you have your children, and a part of planning for your future is that, at some point that child may want to attend universities. This is a good opportunity for you to use the equity in your home to at least facilitate that child and furnish that child through college. We also have vacations. Everybody may say, well, this is COVID and no one is traveling, but travel will come up very soon. And we know that perhaps you now may take the time to appreciate the fact that you were home with your children all this time and you value your family a little bit more. So you want to take a family vacation. This is one area that, you can utilize the equity in your home for this. And again, for your savings, which I would have touched on before, and debt consolidation. All of these are ways that you can utilize that equity within your home. Okay, next. So basically, I hope that you were able to have a good picture, and I would have made you a little bit more excited than Natasha first was when she joined. We really want to help you. I want to reassure you that we are here to do just that. And I'm just going to introduce you to our team of dynamic financial advisors at our Broad Street location. Next slide. So we have our personal banking manager, which is Natasha. You have myself, a premium relationship officer. You have Reid. We have Erica, both premium relationship officers. There's Jabari. We have Ashley, Cara, Jordan, Donia, Regina, and Camille. We are all here to help you and get you really, really closer to making that dynamic decision in joining our versatile team at Broad Street. We want to make you a Scotiabanker, so I want you to send us an email, pick up the phone, give us a call. Let's sit down and discuss this. Let's paint a really good picture for you and tell you how you can benefit from any of these options that I would have made available to you this evening. Thank you, and over to you, Carla.
Thank you, Natasha and Kim. Lots of great giveaways that we all need to consider. I think, Natasha, when you talked about the SMART goals, it's really looking to see how we can develop for our individuals. Everybody's different. And I think you really honed in on, we have to look at every individual situation, look at your plans, what do you want to do? It's going to be different from the other person. As Kim is saying, make that effort to contact us, because when we get a chance to sit down with you, we'll get to evaluate what your situation is. So we're really hoping that some of these good points and great takeaways will resonate with our audience. You are a wonderful audience. Thank you for joining us. More importantly, we hope you feel inspired to take action. So I know we are seeing some questions already in the chat, but before we get to those, there are a few questions that were emailed in that we want to go ahead and address these questions. The first one for Natasha: how does the mortgage approval process work?
Okay, thank you, Carla. Well, first, what we actually do is we do the application. We take an application from the customer. But of course, in order for us to get to that step, the customer would have to provide us with, if they're switching their mortgage in, at least 6 months statement from the financial institution. We'll need to have your updated documents, your job letter, your pay slip, things like if you have any debt outside Scotiabank, if you are looking to consolidate in that way, then you will bring all of the debt to us. We will put that onto the application. We need a valuation for the property, the bank in itself. We will send off for that valuation. And as soon as that is back to us, then we present the application. It usually takes at least 2 weeks for us to provide you with an approval. But after that approval stage, it goes over to the attorney. And of course, you have the choice to choose your own attorney and the bank's attorney. We will send that over, and the process can take at least another 3 months in order to switch into us.
Okay, so
of course,
okay,
Carla, of course, what we will do along the way is we will provide feedback to our customers as the application process goes on.
Okay, so thank you for that, Natasha. So roughly about 3.5 months end to end in terms of the process.
Yes.
So we have another question for you, Kim. How is my mortgage payment determined?
Sure. Your mortgage payment is determined by the length of time that you want that mortgage for, the amount, the loan amount along with the interest rate. That would determine, your monthly payment.
And it's
factors determining your monthly
payment. And of course, it's a reducing balance. So as you go down,
most definitely it is.
And as you talked about, then there may be opportunities later on to use equity and so on. So it all really ties together.
Sure.
We have another question, and I'll ask Natasha to take this one. Can I add someone to my mortgage?
Of course, you can add someone to your mortgage. That person, though, we'd now be doing a fresh application altogether. So we would go through the process of adding the person by bringing the job letter, the pay slip and such like. And then that conversation we will have, obviously that will go over to the attorneys, because if we're adding someone to the title of the mortgage, it might be a little expense for you, which of course we expect that our advisors, who will be the attorneys, they will give you the costing for that. Yeah,
Okay.
but certainly you can add someone to your mortgage.
Thank you very much for that. Now we just have one more before we go to the questions in the chat. This one is for you, Kim. What are the closing costs and how much should I expect to pay?
Okay, so the closing costs essentially are appraisal fees, legal fees, commitment fees. Like I said, it varies. So it depends on the value or the cost of the loan. We would determine that. So it would be better to come and have a one-on-one with our advisors so that we are best able to give you a realistic picture of what that cost looks like for you.
All right, so those costs really can vary. So better to come in as
Correct.
you're saying, but at
Most
least you give us an
definitely.
idea of what those different fees entail so that somebody can really kind of capsulate all the little ins and outs that will come in as part of the mortgage.
Yes.
Okay, thank you very much, ladies. And now let's get to the questions in the chat. A reminder, everyone, once your question is selected, we'll unmute your mic so that you can speak. I see we have a question from Pedro. So this question, Pedro, we're going to unmute your mic so that you can speak. Right, I'm not hearing Pedro. I will go ahead and ask the question. When you switch, do you have to give up your Scotiabank and credit cards once you're doing it joint and it's paid by the bank?
Who's taking it? Kim, are you going to take it, or do you want me to go ahead?
You can go ahead.
Okay. Okay, so switching your mortgage, it doesn't mean that you have to give up, like, for instance, I guess the example is a Scotiabank or a credit card.
Yes.
Once it fits within the overall total debt service ratio, and what that is, the amount of money you earn versus what you're spending on a monthly basis. If it fits that profile, of course, you can keep those two products. If it doesn't fit the profile, we will, have a discussion with you to see, whether or not, even if it's one of the products that you want to give up, or if it's both of them, we will show you how financially that will benefit you. But it's not necessary that you have to give up any of the two products once it fits within our total debt service ratio range.
Okay, thank you, Natasha. Pedro, I hope I covered your question. If you want to go ahead, you can let us know. And we have another question here. I'll give this one to Kim. Can we use our own lawyer?
Yes, you can. We actually encourage you to, because it is definitely, we want you to have your independent legal advice. Your attorneys would be the best persons to guide you and perhaps give you tips that you may not have thought about. So those two lawyers, that is your lawyer, your independent lawyer, along with our lawyer, would, discuss and make it possible for you. Of course.
Okay.
Yeah.
Okay, great. Pedro, no problem. He's saying he's not sure why we can hear him. You can, if there are any other questions, go ahead and type them and we can ask them for you. Now, this question, I'm going to ask Natasha. Can I use an existing property for security?
Hi, Carla. Yes, you can use your existing property for security. So some of the things that we actually do consider will be the value of the property, because obviously we want to make sure that that equity that is being used, it doesn't tip it up over the 100%, but certainly you can use, once we're switching in, let's just remember that that is the security that you would have been using with your financial institution. So we would have to continue to hold that property as a security. But of course, we look for lots of opportunities there. Once there's enough equity, we can have a further discussion in terms of consolidating any debt, or, looking to do renovations to the property. So certainly, yeah, we will hold the property as a security, Carla.
Okay. Thanks for that. I see we have a question here from Ryan Weeks. Ryan, we'll go ahead and unmute your mic so you can ask your question. Okay, Ryan, you need to unmute so that you can go ahead and ask. Okay, I think maybe he's having a little issue there with the mute button. I'll go ahead and ask the question. Can you accommodate if already, let's see, if you already have land, but you just need money to build? Natasha, I don't know if you want to take that one. You want me to repeat the question?
Yeah, sure. Well, at this time, we aren't looking particularly around building on the property. So no, we wouldn't be using that option at this time. I'm sorry, Ryan.
Okay. Let's see here. We have another question here. And let's see if she can unmute. This is Katrina Ford. Let's see if you can unmute. Go ahead and see if you can go ahead and ask the question. If not, I'll ask it for you. Okay, she's not seeing an option. Sorry, to unmute her mic. So her question is, can you please give us an estimate in terms of the percentage of legal fees to switch? Natasha, would you go ahead and take that question?
Yeah, sure. Okay, so in terms of switch fees, I'm just trying to be very clear that you're speaking about the attorney's switch fees. And if it is the attorney's switch fees, there is a switch fee. Sorry? Okay,
yes,
so there is
legal fees. She's referring to the legal fees.
Legal fees, right. So legal fees to switch, no, we wouldn't have that exact amount in terms of what the fees are. But what we can do, generally what we would do is liaise with the attorneys for them to give us an idea, because there is a legal fees calculator that they use and it's a set pricing, but we wouldn't have access to that because sometimes it might be in a tenantry area and that would incur additional fees and such like. So we wouldn't really have the legal fees costing, but what we generally do is reach out to the attorneys for them to provide that rate for us.
Okay, I hope that, I think it may be, she's unable to mute, but she was saying that that was a little bit of a scary part for her, but
yeah, I saw
Trina,
that.
that is something that just keep in mind. The good thing is to talk about it first, and as Natasha is saying, we can get that quotation for you to sort of ease your mind and settle your mind in terms of what the fees would be. So,
and one of the things too, Carla, is, you know, in terms of settling her mind, we also cover some of that fee for you. So once we reach back to the attorneys, then we will do the deduction based on the 3%, and then obviously you would know, you know, what you would have to pay. But yes, I do understand for most customers that can be a little scary, but we give you a little ease of mind as well.
okay.
Peace of mind, I should say.
Yes, yes, we will.
Yes.
I see that there's a question from Hirwati. I'm not sure. I'm not seeing the question. If she's there, she can go ahead and unmute, or if she can unmute to ask her question. Okay, I'm not hearing anything, but we do have another question here, and I'll ask Kim to take this one. Is a deposit required for new purchase?
Yes, a deposit is required, 25%.
Okay.
But again, once you come, and all the time, once you come and have that discussion with us, we will be able to, you know, work around with you, work all around. So whilst it's 25%, we are quite flexible.
Okay, okay. Thank you very much for that, Kim. The question I see here is, I would really like you all to consider to do building. Yes, we have been getting that question a lot, and that is something that what we would say is we're not offering it at this time. But of course, when, you know, if that does change, we do alert the customers, because it's something that I know the average person sometimes does want to build their own and construct their own design. But what we do say is, if there's a possibility that you have an additional property that we could use as security, we try to use that alternative for somebody that wants to build. So we do have that option. It's just the actual construction loan, or what we call home builder loans,
builder.
because there may be persons on the call that may have done that through Scotiabank, know that it's
Yeah.
something we have stopped at the moment. But I do understand, you know, we have a customer here saying they would really like us to consider it. And we will, of course, give that feedback as well. So thank you for that.
Yep.
Let's see, I think we have, trying to keep up with these questions here. All right, what about the application process? I know Natasha talks about how long that takes, but is there anything, Natasha, that a customer is saying here that you can guide a person to help them easily prepare? Because I think a lot of people are daunted by the documentation process. If there's a tip, Natasha or Kim, in terms of getting that stuff together, I know there's a lot of anxiety around going in and sitting about the details. Is there any tips that you can share or something that you've seen that works well for a customer? That's one of the questions.
I say that. Usually it would be your primary documents, which would be copies of your ID, because we want to make sure that we know exactly who we're dealing with, your proof of address. We also need to have your pay slips, which would prove your income, and a job letter. The other steps, the other things that we would need would be a statement from your current banker, just to confirm, you know, the payments that you've been making towards your mortgage, at least 6 months, proof of your payments, and just a copy of any of your liabilities. So this would be for any existing loans or credit cards. This gives us a true picture of what, again, your debt service looks like, so that we're in a better position to guide you as to how much you will qualify for, so that, you know, the process as well is a lot quicker and easier for you.
Okay, thank you very much for that, Kim. And I think, Natasha, also, would you be able to highlight, someone's asking about the credit bureau, if we use the credit bureau?
Yes, we do. So actually, I was going to add on to that as well. We will also request your consent to pull for the credit bureau report as well. That can also help with expediting the application process for you. It generally shows all of the debt that you have with most of the financial institutions. And then, of course, if you have your pay slip, that might carry additional deductions, which the sales officer perhaps may answer the question in terms of, you know, providing additional documentation for that. But certainly we are aligned with the credit bureau.
Okay. And that's something too that really has made a difference in, as you say, the process in terms of having to go and get all this documentation. So we're really trying to work with our customers to see really how can we make it easier for you to come in, talk to us. We don't have to bother you to get all these pieces of paper, and especially with the digital strategy, let's work with you to see what we can do. Now, I see another one here about, in terms of mortgage refinance, if you can touch on exactly what is a mortgage refinance?
Kim, you can go.
Natasha, take that one for me, please.
Okay, sure, no problem. Okay, so mortgage refinance, so the question is what, Carla, what is a mortgage refinance?
Yes, what is a mortgage refinance?
Okay, so pretty much you would have an existing mortgage with your finance institution, or even if it's with Scotiabank. So if you wanted to, for instance, pay out any of your existing debt that you have, so what we can do is we can add your existing mortgage to the debt that you actually have. We have to also do a valuation of the property. Generally, what Scotiabank does is up to 75% of the value of the property is what you can borrow in between those two, in between 75 to 100%. We don't like to tip it up to 100%. So the maximum we go to that you can borrow based on the equity on your property is 80%. So yes, we can do a mortgage refinance. You'd have to provide us with the documentation, refinance the existing mortgage. In some instances, though, this application might have to go back to the attorneys for a further stamping of the mortgage. So let's say, for example, you have a mortgage that's $200,000, and that was your original amount that you would have borrowed. You're asking now for additional $100,000. that $100,000, which will be considered as debt if it's refinancing, to purchase a vehicle, if it's for educational expenses, that additional stamping amount is what will have to go back to the attorneys to bring the mortgage to $300,000. So I'm sure that when we look at refinancing of our property, we do it when you absolutely need to do that. So I would say, that is an opportunity for you to, reduce your overall spend and increase your savings for yourself.
Okay, thank you very much for that, Natasha. Another question here. Do I need great credit to get a mortgage? So Kim, if you want to take this one.
Sure. Not great credit. What essentially we do is to make sure that it fits within the debt service ratio. I think Natasha would have alluded to that before. We appreciate, we're all people too. So we know that as you live, you're going to have expenses. We know that there will be debt existing out there. And that's the importance of coming and chatting with an officer. You tell us what's going on with you, and we help you, we guide you towards making this better to make your dream come true. So don't be deterred by if you believe that you have too much debt or expenses. We just want to have a holistic discussion with you. And once we can work with you towards whether it is planning, if it doesn't materialize like right away, we guide you as to the steps you need to take to make sure that this comes true. So no, we would not say that your debt has to be, that you have to be in a great position, but we will guide you and help you to realize your dream.
Okay, thank you. I see that Pedro has his hand up. I'm not sure if Pedro again wants to ask a question. If you can go ahead, Pedro, you can ask your question.
Yes, can you hear me?
Yes, we can.
Okay, beautiful, fantastic. So just a quick question regarding to what I think Natasha said earlier about, okay, if you have your property and you want to consolidate your debts or whatever, and then you want to bill, I understand, yes, that the banks probably do not want to go through the headache where you have a lot of foremans. What they do, they might not complete your house properly, but is also a disadvantage as well. But if the person have a good credit, will you be willing to look at that?
Okay, so this is willing to do a building as in to complete the structure?
Yeah, correct.
Okay, so what we can do, right? We can do it in phase stages. So we're not ruling out the fact that we can't do a building, but what we can do is do it in phases. So because it is considered as construction and the bank at this moment is not offering a construction loan, I wouldn't say that, yes, we are going to qualify you for, let's say it's 500,000, that you would qualify for 500,000. At this time, we are actually not offering the building loan, but if we do it in a phase stage, let's say for the first phase, I'm doing the bottom part of my property and it's going to cost maybe about 150,000 to 200,000. It is something that we can consider, but it's on an exception basis.
Right, cool. Fantastic. Yeah,
Okay.
perfect. Thanks.
You're welcome.
Thanks very much for that, Natasha. Another question here in terms of the rate. How long is the rate for the mortgage for? Kim, I don't know if you want to take that one.
Yeah, we usually have a fixed rate for 3 years. And after this 3 years, this is an opportunity for us to touch base with you to see exactly what your position is at the time. We also look at opportunities if you are looking to refinance at that stage, if you are looking to do any type of renovations, this may be the opportunity now where your child is looking to go on to college. This is our way to touch back with you to see how, it is going for you, and we consider, the rate at that stage. Yeah.
Okay. I see here we have Another question. I think this goes in line with what Natasha would have been talking about earlier in terms of the pre-qualification, in terms of how do you qualify for a mortgage?
How do you qualify for a mortgage?
Yes. Oh, wait, hold on 1 second, Natasha, before you get there.
Yes.
I see another question here from Katrina. Katrina, we'll unmute your mic so you can ask your question. All right, I think she might have had trouble with the unmute button. So if anything, I know Pedro got through. Okay. Okay, she's trying. All right, I'll go ahead and ask for her. Ultimately, I wish to switch my mortgage and use the equity in my home to consolidate my debts and also add to my home. I love her expression. Yes, enough things. What is the first step?
Okay, so, all right, so we're happy to hear that you would love to switch your mortgage to us and use the equity in your home to consolidate your debt. Yes, so it seems like a lot of things, but like Kim alluded, it's really just for us to gather the documentation. We will do complete a valuation for the property. As long as the renovations does not take you outside of the existing landmarks, we wouldn't need to have town and country planning approval. If it goes outside of the existing landmark, which would have been approved by town and country planning, you would need to secure the approval for that. The maximum amount, though, that we can go in terms of adding to the home will be at least $150,000 is the maximum that we can do, because as we would have alluded earlier, at this stage, we're actually not doing building, but we can assist you with, renovating or adding to the home. Maybe it's a patio that you want to add. Maybe it could be another bedroom. Yes, we can assist you with that. However, if it goes outside of the existing structure or the landmark, you'd have to reach out to town and country planning for that approval before we can proceed. But outside of that, it would just really to, have the documentation that speaks to the consolidation of the debt. The bank in itself will do the valuation of the property, and that goes within the 3% money back that we are offering.
Thank you very much. She says, thank you.
You're welcome, Carla.
Okay, I think we have another question here. When should I start? I know we talked about the approval process. When should I start the approval process? When is a good timing? I don't know if Natasha, you want to take that?
I'm not sure I understand. When should I
start the approval process? So they're looking, they may have found something. I think a lot of times you find customers find the place and then come to look. Isn't it better really from the time you're thinking about it, once you say you should start that process? And what is sort of like the advice you would give to a customer? That's what I think.
Sure. Okay.
Here.
So the advice, of course, what we first do, we come in, we have a discussion with one of my team members. They will go through with you, what type of ranges that you can look at, to try to understand the pre-qualification for yourself. So we look at what debt you have. We look at whether or not this is now the time to maybe do a consolidation of your debt. So, it can help you start to elevate your savings and such like. I would say for sure, come in and have a discussion with the sales officer, because at this stage, they will help you, even for you to try to figure out which property fits your budget or which property suits you best, right? You look for that property, but sometimes, you might say, I want to live on the West Coast. But then when you look at the process that it takes, and, obviously you have to look to get the things like the estimate for the property that you're looking to purchase. You have to get a sale agreement from the person if they're selling you the house. But I would say, come in, let's see where you fit in terms of your budget, and then you start looking.
Thank you very much. Very true. I hope
welcome.
a lot of these tips from Mortgage 101 were very beneficial. We are not seeing any additional questions in the chat, so we're going to wrap things up. Thank you very much, Natasha and Kim, for all the pearls of wisdom you've shared with us. And I want to thank everyone for taking the time to join us this afternoon. Remember, we are ready and able to help for any questions you may have. That's it for today. I want everybody, if you have anything you want to share in terms of questions, feel free to email them to us. Thanks again, everyone, for your time, and take care and keep safe, everyone.
Thank you.
Thank you.
Bye.